Hello everyone. So let us now take up our very last session for completing the revision for the Audit and Assurance paper. So till now, what we have done is we have picked up all the different topics. We have done a detailed discussion about every concept covered by each and every topic. We have followed a sequence different from the study material, but then we have covered in detail each and every part of the auditing syllabus. And as I had told you, the last session, I'll be taking you through the descriptive kind of questions, which is the real challenge for every auditing student. Because objective type of questions, somewhere or the other, you'll be able to handle, because there we know that you'll be having 4 options available with you, out of which most of the time you'll be able to answer it with ease. Otherwise, you have another strategy of elimination where you'll be able to somewhere or the other tackle with those kind of questions. But the problem that the students really face in the audit paper is with descriptive kind of questions, wherein you have to give an exhaustive written response to the entire question that has been asked. And the section B of this paper is basically going to talk about the descriptive questions where you have to give in detail a written response to the question that is there in a very descriptive, in a very elaborative manner. So the section B, which is going to talk about the 70 marks of the paper, where we are going to have 2 20-mark questions and 1 30-mark question. This is going to be the real challenge that we face in the examination. All right. So today's class, we are going to concentrate on the questions that I'm going to pick up from the exam kit, where we'll pick up questions from different topic, which are going to be completely only about the descriptive type of questions. Because when I took the initial sessions for the revision with respective topic, I've also taken 1 or 2 case-based questions where objective type of questions we have done already there. So I think that would be quite sufficient enough for you to understand the kind of questions, the scenarios, how much you need to focus on the scenario, how much importance has to be given to the question. I think that is quite understandable through the exposure that you have got to the type of questions that we have done. But then today we don't take the objective type of questions because I'm sure you'll be able to handle it. So we will take the difficult part, or maybe the part which is a real challenge to the students, or where the students are really scared about of this paper, which is the descriptive side, that is the section B. Now, understand that the topics like planning, risk assessment, evidence, internal control, these are the topics which are focused upon or which are genuinely or more regularly being questioned as a part of section B. The topic of risk assessment is 100% a question which appears as a part of section B. So there has to be a proper methodology, there has to be a proper approach, there has to be a way in which you really can attempt the questions correctly. The problem is you'll be knowing the concept very well. The problem with the paper like audit is that you will not understand for which question what answer has to be written. You know the concept very well. You know what is the procedure very well. Even then, you will not be able to correlate, yeah, for this particular question, this answer has to be written. This is a very common mistake that people do or students do when it comes to the audit risk chapter. The thinking only is completely diversified. Students start thinking in a wrong perception. They'll think in the footsteps of or maybe they'll enter into the shoes of a businessman. No, we are auditors. So basically the entire answer, the way in which we are supposed to give the answer, you have to keep yourself in the position of the auditor. And you have to give an answer thinking, I am the auditor, so the risk that I'll be concerned with is going to be audit risk. So I have to see how it is going to impact my financial statements. Because of this particular item which is given to me, will a particular matter be overstated? Will it be understated? What procedure should I adopt to understand this kind of elimination of the risk or mitigation of the risk? What procedure should I perform? So basically the approach is very important when it comes to a paper like audit. Okay, so what I have done is I have picked up from different topic, different type of question so that you get a proper coverage or a proper understanding of how the questions have to be tackled. So the first 2 questions which we are going to pick up is going to be from the topics of audit risk, and one is going to be regarding internal control. These two topics or these 2 questions I will do exhaustively with you so that you understand how the approach has to be, how the answers have to be formulated. Then we have 2 other questions where we are going to read it, we are going to understand it, but through the answers we'll run through quickly so that you get an understanding of how these questions have to be answered. All right. But before that, we will have a little understanding of what should be the right approach for the examination, what points you need to keep in your mind before you enter the exam hall, what is the ideal way for you to tackle the section A and the section B. So let us have a quick understanding of the important points pertaining to the examination, and then we pick up the questions in detail. So with this, let us get started. So first, let us understand the approach for the examination. Okay, this I'm only giving for the purpose that you know what should be the ideal way of preparation. How should you know when you enter the examination hall, you should be understanding, or when you're writing the exams online, you should be understanding what should be the correct approach for you to actually face the paper. Okay. Now, obviously, we know it is a computer-based examination, broadly classified into two parts, section A and section B. Now, the objective type of questions, okay, there'll be, you have already seen, there will be short scenario given to you, wherein you have to choose the correct answer from the options which are given to you. So, this is already the structure you already know. Read the objective type of questions first, and then you start reading the information given so that you'll be exactly knowing which information you have to focus on. I told you many a times in the objective type of questions, the questions that not require the reading also of the scenario. They will be quite straightforward from the concept. So in these particular areas, it is very important that you understand that you don't focus upon the scenario too much. You read the questions quickly once so that when you read the information given, you'll be understanding which information should I really focus upon. Okay. Each objective question will be of 2 marks that you already know. That means we'll be having 18 minutes to answer the 5 OT type of question. The objective type of question, you will require 1.8 minutes per mark. Okay, that is the strategy. So much timeline we don't actually adhere to. Some questions we solve it very quickly, not even taking so much time. And some questions we take a little bit of time. But overall, the time management should be like this. Okay, then. It is likely that all of the cases will take the same length of time to answer. Okay. Although some of the OT questions within the case may be quicker than the other questions with the same case. So I told you some questions will be easy, some will be difficult. So overall, the timeline that you'll be requiring is 1.8 minute per mark. That is the common timeline because some will be easy, some will be difficult. Easy you'll solve quickly, difficult will take that extra time which you have saved in the easy questions. Okay, work steadily. Rushing leads to careless mistakes. And the OT questions are designed to include plausible distractions, that is answers which result from careless mistake. See, whenever you read the objective type of questions, understand the questions are not going to be so obvious that you can pick up. Okay, it is no longer the kind of level that you're studying where, you know, out of 4 questions, 2 easily you can knock off, out of 2 only you have to pick up, and easily you can do that. No, here most of the time, out of the 4 options, 3 options will look somewhat correct only. So obviously you have to be very careful in reading. You need to read the question twice and thrice sometimes to understand what exactly they're focusing. Just to give you a simple understanding, in the previous session where we spoke about corporate governance, there was a question which was speaking about what should be included in the annual report with regard to audit committee. Correct? So the other question was regarding audit committee. When you look at the options, there was talking about annual written inclusion from the director's responsibility, from what is the responsibility of the board, what is the responsibility to be, you know, confirmed by the TCWG, and also it was giving about the information that had to be included with respect to audit committee. So all these options which were available, they spoke about the content of annual return only, but the question was focusing about the audit committee. So you have to pick up the correct answer of what the audit committee's answer was. Correct? So though the 4 options are the part of the audit, that is the reporting in the annual return only, but you have to read the question very carefully where they're asking you only regarding audit committee. Got it? So your careful reading will become very important. Carelessly if you read and you think about what is the inclusion in the annual return, then you will not be able to give the correct answer. You would do some kind of mistake which is very careless. That is lack of reading. After you have eliminated the options that you know to be wrong, if you're still unsure, even then you guess because there is no negative marking. So please do not leave any particular answer. Okay, you'll have no negative marking. So please go through it. Now comes the real challenge, section B, which is completely a construed response question. A written response rather than objective type, because objective types you can, anyhow the answer will be available, you need to pick up. Here, from the scratch, you need to write it. The frame, the thinking, interpretation, and the writing, everything is from the student's point of view. Okay. Each question will contain some knowledge-based. Obviously, some of the other knowledge-based requirement will be there. Some concept will be tested in every question, and ISA requirement also will be tested. Also that you should understand scenario will be given to you very clearly. Your answer will be very clearly relevant to the scenario. Do not try to give something that you have by-hearted from the material. Do not populate it there. Not required. When it is scenario based, your answer should be to the point. When scenario is given, see that you generate your answer based on the scenario. You don't create a scenario and give the answer. What you would do if scenario would be like that. You will get no marks for it. Okay. For each question, read the requirement very carefully. See, sometimes they'll ask you regarding assertion. Sometimes they're asking you to write analytical procedure. Sometimes they're asking you only to write substantive procedure. Okay, they're asking you to identify the deficiency in the internal control. Sometimes they ask you to pick up the audit risk, correct? So you need to know what is the requirement. Think, analyze, and give the answer based on that. Do not give any and everything what you know about a particular topic. Okay, very clearly to the point you need to give the answer. Then, sometimes what happens is you require to understand the format required. Sometimes they ask you to draft the letter, memo, notes, and all of that. Sometimes the question will be very clearly asking you to write in a, you have to give questions. So you should understand when bullet points have to be used, when a sophisticated answer, like very much to the point answer has to be given. So very formal reply has to be there for your particular answer. Okay, then. Sometimes the question will be based on the tabulated way. Like for example, when they ask you to find out the audit risk and how would the auditor deal with the risk, then usually the audit risk will be one column and the approach of the auditor or the response of the auditor will be another column. Usually you will have pre-print formatted tables. So you simply have to use them and you have to populate the answer. Okay. Always read the questions properly, which you feel easy. Start writing them so that you have, first picked up where you can score, and then you will have all those questions where you have a little difficulty in reading or understanding. Then highlight questions for review. This is like if suppose you have a doubt in what you have written, see that you highlight and keep so that at the end you can simply go through once again so that you'll have no doubt in what you have written, or you can recheck so that you can, correct if you have gone wrong anywhere. And as I told you, section B will be including questions from planning, risk assessment, internal control, audit evidence. So basically today also we are going to take questions from audit risk assessment. I've picked up a question from internal control, also from evidence, and most importantly, I've also taken question from completion and review. Okay, so descriptive question will help you understand these things. Audit risk quality, while I was teaching the part of the audit risk chapter, that itself I told you, you have to be very particular about the question there. You need to understand what the question is asking you about. You need to identify how it is the particular scenario affecting the financial statement. In the financial statement, which item? Is that item being overstated or understated because of that? How will the auditor understand how to eliminate or mitigate the risk? So you have to be very clearly focusing about what the answer should be. Then once you identify the control deficiency, you have to address what is the deficiency, and obviously you have to give the recommendation. Then you have to understand what are the direct controls and then how you're going to test the control. And in audit evidence, obviously this will be as a part of substantive audit procedure. When the question comes on performing substantive audit procedure, it is asking you to accumulate audit evidences. Okay, so this is the way or the proper approach through which you'll be understanding how the exam questions you have to face, and you need to have a lot of understanding that you don't do selective preparation. Your preparation should be 100% because 18 different questions in the paper. All of these papers could be covering wide area of the questions, so nothing can be left for the options. You have to have enough practice, especially for the descriptive questions, and the exam kit that you'll be having access to that gives you a lot of type of questions to get exposed to. You have to practice actually the computer techniques so that you'll be able to write the answers really well. Okay, and whenever you're preparing, see that you actually keep the clock, the timer fixed, and only then you start with the preparation. All right, yes. So let's get now started with the question bank. So let us pick up the first question for our practice. So before that, as we had discussed the revision session, I had told you that the last thing that we are going to do is going to be regarding taking up the questions from the exam kit. Okay, so we are going to now take up the questions from the exam kit. So important questions, that is, they're not important questions. Basically, I have taken it to be just for the exposure purpose so that you get an understanding of the kind of questions. So let us take question 201 from page 107. Okay. First, we will only analyze the question properly. We will have an understanding of whether we are picking up things correctly or not. And then we'll look into the answer also so that we'll be able to understand whether we have picked up correctly or not. So it is page 107, question 201. Okay. So we have this question coming from the topic of planning and risk assessment. So let us have a detailed reading. Okay. While reading, you have to concentrate 100%. Okay. You should be very much focused upon what is the deficiency, what is the risk that they're talking about, and you should be able to pick up as of now the risk correct. The scenario is relating to 5 requirements. That means there are going to be 5 questions based on this. It is 1st July 2015. You are an audit supervisor with Apricot and Company and have been assigned to the audit of Peach Company, a soft drink manufacturer which sells to wholesale customers. You are currently planning the year-end audit for the year ending 31st August 2015 and have received the following notes from the audit engagement partner. Materiality for the draft financial statements have been calculated at $153,000, which is 5% of the PBT. Okay. So obviously engagement partner will decide all of that. And you are the supervisor. Now you are planning the entire process and the notes have been come to you from the engagement partner. So what are the notes talking about? A new accounting system was introduced via direct changeover in March 2015. It has been successfully tested prior to its implementation, and the management has such confidence in the new system that they did not consider it necessary to undertake further system. Look at this. They have not considered it important to again test it further. Further testing for implementation they have not done. One of the main risks. Okay, if you don't do the further testing, then there could be a possibility there is a risk of material misstatement with the recording of the transactions, because the accounting system is new. So prior to implementation, you have tested, but after implementation, you have not checked. So there could be a possibility of opening balances being wrong, or maybe the accounting entries which have been posted for the current period, they could be wrong. So there could be a risk of material misstatement here. So first thing is that. Then, Peach Company has been developing a new production process, which will help to reduce sugar in the drinks by 50%. Development commenced on 1st of November 2014, and the total amount capitalized was $0.8 million. On 1st May 2015, the Food Safety Authority approved the process and the production of new reduced sugar soft drink commenced. So it is new. Peach Company has inventories of high sugar drinks costing $227,000, which can no longer sell in its home market due to lack of demand. Okay, so inventory is in stock. So valuation of inventory could be a big question. Okay. The director believes Peach Company can sell the remaining inventory to an international customer at a price that marginally exceeds the cost, but Peach Company will be responsible for all the costs relating to delivery and shipping. Okay, so though you're not able to sell at a higher price, you're crossing the cost, but even then other expenses you have to incur. So you have to understand what is going to be the NRV. For the valuation, you have to understand, you have to value at cost or NRV, whichever is lower. So these all information will be important for you to understand the NRV. Okay, then. Peach Company replaced 2 items of machinery in its production line to accommodate a change in the type of bottles used. There were significant staff costs involved in preparing the staff of new machinery, and in testing that the new machinery was operating effectively. These costs have been included within the wages and the salaries. See, this is a particular cost which was involved for the purpose of preparing the new machinery. So basically, I believe it has to be capitalized. So there has been a wrong accounting treatment given for the purpose of this particular cost. They were included as revenue, salary and wages expense for the period. Despite the old machinery being sold at a significant loss, during the year, the directors of Peach Company decided to extend the useful life of plant and machinery by an average of 5 years. So you have sold at a loss, but you believe the life is more. Okay, so this is unreasonableness of the accounting estimate. Then, a member of the finance team was dismissed by Peach Company in March 2015 after it was discovered that they have been fraudulently purchasing non-current assets for the personal use. So there has been a fraud. So internal control failure. Okay. Peach Company started investigating the fraud at the beginning of June 2015 by reconciling all the physical assets to the non-current asset register, but will not have completed the reconciliation by the year end. So they started cross-checking with the maintenance of the books and the real physical assets, but they could not complete the reconciliation till the year end. Okay. So still we are not sure of how much is the fraud and all of that. 1 second. Then further, Peach Company entered into contract on 1st of May 2015 with a new supplier of bottles. Peach Company has committed to a minimum order quantity of 150,000 bottles per month for a period of 12 months commencing from 1st May. No cost have been accounted for the date as no amounts are payable for the first 6 months. Even if it is not payable, it is still due, right? So it has to be accounted. 3 equal installments are then payable across the remainder of the contract term. Peach Company's previous supplier has launched a legal claim against the Peach Company for the breach of contract, stating that Peach Company did not have the right to exit the agreement earlier. So this is giving an indication of whether provision has to be created. Peach Company's lawyer have indicated that it is likely to lose the case. Then it is sure that you have to create a provision because probability is there. And I've estimated the amount payable, so you can reliably measure also, to the $0.3 million. Okay. Then, in order to fund the development of the new production process and the purchase of new machinery, Peach Company obtained interest-bearing bank loan of $1.2 million on 1st of March 2015, repayable over the next 3 years in arrears. Okay. Then, in order to secure the bank loan, Peach Company agreed to maintain a minimum net profit margin and meet specific sales target. So, in order to secure the bank loan, this much profit margin and so much sale you have to attract only. So, risk could be that there could be manipulation. Just to keep themselves obtaining this particular bank loan, they could inflate these figures. So, again, an indication to the audit risk. Okay. Here also accounting has not done audit risk. Okay. Provision has not been created by them, again an audit risk. to ensure whether proper accounting has been done or not. So basically throughout reading also we have picked up many of the audit risks. Okay. Now describe 8 audit risks and explain the auditor's response to each risk in the planning of the audit of each company. See, audit risk, if you can quickly go through also, no, audit risk thing in the auditor's approach. Audit risk, how you have to identify. First, you have to understand audit risk means what? Inherent control detection. So you have to first pick up whether it could be an inherent risk. Is there a control risk? Is there a detection risk? All the 3 risks will accumulate to what? Audit risk. So based on that, you have to identify whether there is a risk of material misstatement. Risk of material misstatement could be either financial statements are wrong, assertions are wrong. Whether there is overstatement of the assertion, whether there is understatement, okay, of any particular item. Once you identify the risk, then you have to apply the procedures to understand how you are going to reduce the audit risk to an acceptable level. Correct? So basically, you have to check some documentation, you have to do some inquiry with the management, have some kind of letters sent, okay, written representation you have to obtain. So there are going to be multiple procedures what the auditor is going to adopt in order to understand or give a response to the audit risk which he has found out. So many risks that we can check across is that new system has been implemented. Okay, it has not been tested further. So there could be an inherent risk of mistakes to be there. Then you can see that there has been a new production process. So you have to check for the control risk also here. Then you'll see inventory is lying. So their evaluation of inventory could go wrong. Correct? Because they are saying international customer is there, but you have to see whether really customer is available or not. If you have to understand what is the price that they finalized to understand the NRV after taking into account shipping and all these delivery costs and all. Then 2 items of machineries have been taken. Here you can see big risk is regarding the costing. Risk of material misstatement is present with respect to the amount. So assertion could be wrong of the valuation, okay, of the particular machinery, because it could be an understated one because staff has to be capitalized, so understatement could be there. Then there is one person who has been dismissed. Okay, why? Because he's done fraud, so control risk is present. Correct? Then you can see that you have to account for some of the amounts. So risk is there of understatement of the liability. Okay, that is overstatement of the figures have been there. Correct. Then you can see that there is a particular law case, so provision could not be there. Provision, if it is not done, understatement of liability is there. Correct. Similarly, loan is there here, and just to obtain the loan, they are doing some kind of commitment to the banker about their profit margins and all. So there could be a possibility of inherently there could be a risk of manipulating of the financial statements. So they could have understatement, overstatement. They could have touched upon the figures to increase the profit. They could increase the sales figure randomly with dummy entries and all that. So there are a lot of risk involved. So you can easily pick up the audit risk and you can give the audit responses. Correct? Then describe apricot company's responsibility in relation to the prevention and detection of fraud and error. So this is a straight question which talks about apricot company's responsibility, that is the audit firm's responsibility. So when you talk about audit firm's responsibility in this particular area, fraud has been committed. So you have to give all the responsibility with respect to ISA 240. If you even cannot remember it properly, you have to understand that auditor's primary responsibility is to obtain reasonable assurance as the financial statements are free from material misstatement, whether due to fraud or error. Then he has to see whether there are fraudulent indicators, whether controls are in place. Okay, is there any indication of fraud to be happening? Reconciliation, whether properly carried out or not. So basically, you are going to pick up every item with regard to fraud, which is covered by ISA 240. And suppose if you identify fraud, you have to investigate it further, communicate with appropriate level of management, TCWG, ask them for the disclosure of all of those. Correct? And if they're not responding well, or if they're not doing what you're required to do, then definitely you can ask them to modify the audit report. Okay, so you'll be modifying the audit report with a communication with them. So basically, this is a straightforward answer with respect to reference to ISA 240. Then further, they have extended the question. Peach Company has been an audit client of Apricot and Company for the last 15 years. The audit staff of Apricot and Company and the client staff of Peach and Company have enjoyed a meal together at the start of the final audit. Oh, that's fine. Alan Edward, the managing director of Peach Company, has this year suggested that instead of a meal, all the audit staff and the client staff go away for a weekend to a luxury hotel at a Peach Company's expense. This is attracting them, taking them into their own, you're trying to attract them, providing them some kind of luxury and all because they should talk in your way. Okay. Alan Edward has also suggested that current year audit fee is renegotiated to be based on the percentage of each profit. Okay. This year, for the first time, Apricot and Company has been approached by Peach Company to identify potential acquisition targets. That means which they can merge with somebody or not, whether they can acquire or not. Okay, can they acquire somebody? They're trying to get some kind of advice from them. Discussions are currently at an early stage and no work has been undertaken. the total fee in relation to the audit and other work would fall within the acceptable level in line with ACCA's code of ethics. So that is okay. Now they're asking you the question, identify and explain two ethical threats which may affect the independence of apricot audit of each company. Very easy. 15 years itself says familiarity threat. Second, they're also talking about audit fee, self-interest threat. One more threat if you want to pick up, no, very easy. They're telling you that they have approached you to identify potential acquisition threat. That means if you want to find out the potential acquisition threat, if you want to see whether where acquisition and all can happen, mergers can happen, you're indirectly promoting the client's business. So you're promoting the client's business, obviously advocacy threat also will be present. Advocacy threat is present. So here basically three threats are there. Familiarity threat is there. Self-interest threat is there. Advocacy threat is there. Okay, for each threat, recommend appropriate safeguard to reduce the threat. So first you identify the threat and see that what safeguard could be. Let's take one safeguard for an understanding. So if suppose you are working this meal together, you can take obviously with the due permission of the engagement partner and all. So audit manager you can talk to and go for the meal together. But you can very sophisticated manner in a very good tone, politely you can reject this particular option of going for a luxury stay and all that. Okay, and obviously do not agree to this particular thing of getting a percentage as a net profit. No, see that whatever resources, whatever time you're giving as a commitment, okay, or whatever time is involved for the purpose of conducting the audit, your fee should be proportionate to that. These all criteria should not be there. So these are safeguard measures you can take up. Okay, all right. So this is a question. One more thing. Okay, one more question has been added upon. Describe substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to each company's development expenditure. So for development expenditure, if you want to obtain evidences, you'll first ask the breakup of the expense, take all the inventory, the machinery expense, break up and check how much is for labor, that is wages and all, how much is the purchase cost, see whether staff cost is actually involved for the purpose of, installation. If that is the case, that also has to be going in for the, the development. Okay. It should be capitalized. And if it talks about the development of the new production process and all, then you have to be very careful. See, once again, it is development expenditure. So I think development expenditure is basically about what have they developed here? The new production process. So it is going to be an intangible asset. So you have to bifurcate properly based on research, development, and if it is research, it has to be revenue. It is capitalized. If it is a development, then you have to add it to the cost of the asset. So basically, you have to take into account the proper accounting standard to understand how recognition has to happen. So where is the development expenditure basically taken up? Yeah, developing this part. It's a new process. So basically it is intangible. So you have to get a proper breakup. Okay, so that you understand which has to go for revenue, which has to be capitalized, so that you understand which goes to the cost of the intangible, where there has to be directly to P&L account. Okay, so all of that breakup you have to get and understand. Also, you have a communication with the management. Talk to the authorities and understand, or talk to the management and understand about the breakup, about segregation of the expenditure, how much is towards the research, whether really it is in progress or not. Okay, so breakup and all you have to take. So in detail, you can give the substantive procedures here. Okay, so since we have gotten a by large understanding of the entire question, now it's a time for us to actually look into the answer and see how this answer has been questioned. Look at this question, how it is answered properly. It's a 30-marker question. Okay, so your understanding to this question has to be very clear. So let us move on with the understanding of the question. Okay, let's look into the answer given by the material. So first tips are quite common. These tips, whenever you are going through, you can just have a quick reading. The same thing I've explained it to you. Okay, now if you look at it, usually the questions of risk and response, which is a very common question in the exam, you can actually expect a question on this. So you always have a pre-formatted table available. So you have to write one column as audit risk, other will be the auditor's response. Understand auditor's response. So the approach will be in the auditor's point of view. Do not give business risk. The wrong approach. Okay. Let's see first of all we have picked up correctly or not. Did we speak about the new accounting system? Yes. We said they have not done implementation testing. After it has been implemented, they have not done testing. So obviously it's a big risk. So opening balance could be wrong. Okay. And also risk of material misstatement could be of the accounting records going wrong. Correct. So if you look, we can take 2-3 audit risk for our understanding. Okay. And then we can see how the audit response has to be. So that will give you an understanding of how the questions have to be answered. So I think first risk we properly picked up regarding the new accounting system. So look at the auditor's approach. The audit team should undertake detailed testing to confirm all the balances have been completely and accurately transferred to the new system. So first of all, we have a doubt regarding opening balance, right? Because new system, that means from the old system, things have to go to new system. So everything has to be forwarded to the new system. So as an auditor, you have to completely check whether completeness and accuracy is there or not. They should perform walkthrough. Walkthrough means you're taking internal controls whether they're properly implemented. That means the process is actually working in force or not. Then discuss with the management any new issue that they have encountered since the new system was implemented. So that you will know, is there a risk of material misstatement present for the purpose of understanding whether things have gone wrong in the recording or maybe the outcome from the new accounting system. Okay, so that is the risk you identify and the way in which the response you will give. Then development cost, as we picked up correctly, it is talking about the intangible asset. Correct? For intangible, you have the IAS 38, which is given a very strict criteria of when you have to recognize an intangible asset. Okay, if it is only research based, then you have to directly go for expensing it. If it is development, then only you can capitalize it. Correct? So you know it. So you're there telling each company has a development of a new production process and $0.8 million was capitalized. So you have to understand whether it is meeting the criteria of IAS 38 or not. There is a risk that risk expenditure can incorrectly be classified as development and basically intangibles could get overstated. So this we picked up correctly. Then you have to ensure the capitalization expenditure should be amortized over the life of the process. So whenever you talk about development expenditure, which is intangible asset, you also have to look into for capitalization amortization here. Okay. So there's a risk that the amortization has not been correctly calculated, because of which there could be a misstatement in the amortization. Because understand, if the development expenditure is not properly calculated, amortization also will be wrong. So here, as I picked up correctly, and I told you have to look into all the detailed documentation, get the breakup values of everything to classify correctly what will come into research, what will come into development. The auditor has to ensure all the research cost goes to the P&L account and all the development only goes for capitalization. And based on that, you have to check whether amortization is reasonable, taking into account only what has to be capitalized. Okay, so it has to be a reasonable estimate. You have to discuss with the management. So the audit team should discuss with the management the policy applied, particularly in respect of identifying research and development. You should have the detail of the review of the cost, which has been capitalized with the supporting documentation to understand the nature of the expenditure. Look whether development, okay, which you have capitalized is meeting the criteria of IAS 38. And obviously, you have to discuss about with the management what is the useful life considered, and based on that, check whether amortization has been calculated correctly or not. And when we have done the regular classes, I've told you depreciation, amortization are those areas where we actually go for recalculation, reperformance. So basically, auditor requires to reperform amortization calculation to ensure whether it is correctly done or not. Then look at the third risk. Third risk also we picked up correctly, where I told you valuation of inventory could go wrong because the inventory is now piled up. So cost or NRV, whichever is lower, is way in which you do the valuation. So here, because you don't have any market, obviously, you need to check up whether what is the NRV. NRV could be less than the cost because market is not there. And also here the question is telling international customer is there. So you as the auditor has to check whether really customer is there or not there. And also shipping and other costs you have to take up. So you have to basically understand what will be the exact NRV. And if the NRV is going below cost, then inventory has to be valued at cost. If that is not happening, that means, sorry, at NRV. And if that is not happening, that means overstatement of inventory is there, which will affect the profit and all the other figures. Okay. So the risk here is each company holds inventory so much that is no longer saleable in the home market. It believes it can be sold to international customer, but there are significant additional costs also included. Because of this, what is the risk? There is a risk that NRV of the inventory is less than the cost, and therefore the inventory is overstated and the cost of sales will be understated. Correct? Now, how will the auditor check it? The auditor has to first identify whether really international customer is available. The audit team should discuss with the directors their belief that the inventory can be sold and should review if there is any agreement with the international customer to determine the likelihood of the sale and the selling price of the inventory. Also understand what would be the price for the purpose of packaging and all that. They should also obtain supporting documentation in respect of delivery and shipping costs in order to establish the NRV. And based on that, you'll be able to establish the cost. So you'll be able to decide which cost is less, whether cost is less or NRV. Correct? So obviously risk. Let us take one more risk so that you'll have a proper understanding. Staff cost. Now in staff cost, we understand the concept of PPE, where we talk about, very clearly that any cost which is directly connected with the making the asset to bring in its condition or for it to be ready for use, that we capitalize. So here 2 machineries have been taken and there has been a staff which has been involved in the installation of this machinery. So basically that entire cost has to get capitalized. And basically here what the management has done, the staff cost has been sent to revenue. That means profit has been understated, expense has been overstated, and this particular machinery, that is value of the machinery asset, has again got to be what? Understated. So there is so much of risk involved. Because of this wrong accounting treatment, there could be all this risk. So auditor obviously has to check whether there has been a proper classification between revenue and capital and see that proper capitalization has happened. And also if capitalization is correct, you have to also look for depreciation, whether it has been correctly calculated or not. So allocation of the staff cost has to be done correctly. Only then all this understatement and overstatement can be nullified. So each company has included wages and salaries, significant staff costs involved in the preparation of the site of the new machinery and testing of the new machinery. They have included where in the staff cost. So as per IAS 16 PPE, it says costs which are directly attributable to bringing the asset to the condition for the intended use. It has to be capitalized. Therefore, here the cost of site preparation and the cost of testing, everything has to get capitalized. It appears that there is an incorrect accounting treatment which has been applied because the staff cost has been, all the employee cost has been taken to the staff cost, resulting in understatement of the property, plant and equipment and overstatement of wages and salary. So we picked up the audit risk correctly. Now what will be the response? The audit team should discuss with the management and the accounting treatment applied and request the relevant staff cost to be included as the cost of PPE. The audit team should also undertake the review of the staff cost expense and process for allocating the staff cost to the work undertaken to come out that the amount to be capitalized as a part of cost of machinery. If the adjusting journal entry is made by the management, this should be reviewed for accuracy. So after you tell the management, if the management is ready for it, even then don't trust the management, you again carry on a review. Okay. So basically staff cost you can talk about, or you can look into the further processes like we picked up the PPE's useful life. It is an unreasonable estimate also. So based on that, you have to check for the depreciation. Fraudulent purchase, so that will be accountable for your control risk. Control could be a failed one. New supplier cost. Okay, so there is a risk that liability could be overstated. Okay, and sorry, liability could be understated because I'm recognizing your liability towards the 3 months payment that that is due. The legal claim, okay, which you have not accounted for. So based on IAS 37, you have to create a provision for that. New bank loan, obviously, it is accrued, so you have to show it. Liability cannot be understated. Most importantly, loan covenants are there because you have told that you're going to keep respective margins, sales target. So there could be a highest possibility for manipulation of the key balances. So there could be overstatement of revenue and the profits. So all of this is the audit risk, and based on that, the auditor has to give a proper response. Okay. So this is the actual way in which you give the answer. Then I told you IAS 240 has to be written as it is because they're talking a straight question regarding how will the auditor's responsibility will be with respect to prevention and detection of fraud. So you talk about the material misstatement, identify the fraud risk factors are there or what, identify if there are any elements, then you respond appropriately, be professionally skeptical throughout the course of the audit. And if there is anything identified, you communicate with the management, discuss with them. And obviously you have to inform the appropriate parties if you have any kind of suspected or actual fraud identified by you. Threats we identified correctly. There is a self-interest, familiarity threat, and also we thought about the advocacy threat also. So threats we have correctly identified. And substantive procedures, development expenditure, obviously, you have to look into IAS 38 to identify whether properly they have been capitalized, get the breakdown of the expenditure, pick up a sample and check whether proper research and development have been segregated. Research you bring to P&L, development you capitalize, and amortization also you have to check according to that. All right. So basically, this is a question of 30 mark, which will play a very important role as a part of examination. So this question is an exhaustive coverage of how you really required to attempt an examination question. Okay. All right. You can see how elaborately it has been given. Okay. So let's go back. Okay. So now let's take up a question from internal control. So we'll pick up the first question from internal control. So we'll take page 150, question 229. Okay. Let's get started. This question is basically focusing on internal control. Now, this scenario relates to 7 requirements. So 7 questions have been asked along with this particular question. Okay. So your logical thinking is very important than more of your conceptual understanding of audit. It is 1st July 2015. You are the audit supervisor of Scarlett and Company, and you are in the process of reviewing the systems testing completed on the payroll cycle of Bronze Industries Company, as well as preparing the audit program for the final audit for the year ending 31st July 2015. So you are reviewing the system checking. So internal control you are checking on what payroll salary that is, and also you're designing the audit program for the final audit. Okay. Now, let us understand the structure of Bronze Company. Bronze operates several chemical processing factories across the country. It manufactures 24 hours a day, 7 days a week, and the employees work at a standard shift of 8 hours and are paid per hours worked at an hourly rate. Okay. So that's the structure of Bronze Company. Factory employees are paid weekly, okay, with approximately 80% being paid in bank transfer and 20% in cash. The different payment methods are due to the employee preferences, and Bronze has no plans to change these methods. So some part is given in cash. Okay. All right. The administration and sales teams are paid monthly by bank transfer. That's fine. Then factory staff each are issued sequentially numbered clock card with the details, their employee number and name. Okay. Employees swipe their card at the beginning and at the end of the 8-hour shift, and this process is not supervised. Internal control failure. No control. During the shift, employees are entitled to a 30-minute paid break, and the employees do not need to clock out to access the dining area. Very bad. Then obviously, if you don't have to clock out and clock in, then in that case, you will not be able to maintain a proper track of really you spent 30 minutes or 45 minutes or 1 hour. Okay, so there is no way of tracking out how much break you took. Clock card data links to the payroll system, okay, directly connected, which automatically calculates the gross and the net pay along with the statutory deductions like provident and all that. The payroll supervisor for each payment runs checks on the sample basis. Some of these calculations to ensure system is operating effectively. So good control. The payroll manager is doing this cross-checking. Okay. Now next. Bronze has a human resource department which is responsible for setting up new permanent employees or leavers. Okay. Obviously HR only will do this. Appointments of temporary staffs are made by factory production supervisors. Bad. Factory people should not be involving into all this. It is human resource only who takes up all this. So here when factory people are doing, there could be a, no proper record available, or there could be some kind of manipulation also, because if one particular department is handling all the employees, there could be a better understanding. Governance could be better. Occasionally, overtime is required of factory staff, usually to fill the gaps caused by the staff holidays. Okay. Overtime reports which detail the amount of overtime worked are sent quarterly by the payroll department to the production supervisor for their review. Okay, you're sending to the production supervisor for review, it's a good control, but you are sending it quarterly. And as we have seen, factory workers are paid weekly. So after the payment, you're sending for review. Bad control. It has to be reviewed also weekly, okay? So sending quarterly every 3 months is a bad idea. You have to say, as and when payment is done, review also should happen. So payment you will do weekly, but review will do quarterly. Bad control. To encourage staff to attend work on time for all the shifts, Bronze pays discretionary bonus every 6 months to the factory staff. The production supervisor determines the amount to be paid. Production supervisor is determining. Bad again. Bonus it is. Directors, production director. Okay, all these people should be responsible. TCWG should be involved. Okay, then this is communicated in writing by the production supervisor to the payroll department, and the bonus is input by the clerk into the system. There is no review happening here. When review is not happening, again the control is a failure. For employees paid by bank transfer, the payroll manager reviews the list of the payment and agrees the payroll record prior to authorizing the bank payment. So one person only is doing everything. Payroll manager only is going to review and he's only going to pay. So obviously there is no segregation of duty, failure again. If any changes are required, the payroll manager amends the record. See, custody, control, everything is with him. For employees paid in cash, the pay packets are prepared in the payroll department and the clerk distributes them to employees. And she knows most of these individuals, she does not require proof of identity. Again, bad. See, you're doing cash. First of all, this is a bad thing. On that, this person says, I know people, so I'm not checking their IDs. Again, wrong. How much ever you know, it is your duty that you cross-verify and IDs have to be cross-checked to ensure the authentication. Okay. So again, there are multiple control deficiencies. Okay. In this particular question, easily you can pick up also. So usually when it comes to internal control questionnaire, even without the knowledge and audit internal control knowledge also, you will understand where things are going wrong. But obviously why you require the proper audit knowledge is because you need to give an answer very precisely. You need to understand what is the deficiency, how to overcome the deficiency, what should be the auditor's response. You have to properly give the wordings. For that reason, this kind of knowledge is very important. Explain why the auditor needs to obtain understanding of the components of the internal control relevant to preparation. And this is not even a requirement of the reading of the scenario. You know why. As a part of the audit, we are very much concerned with the financial statements, but because of the volume of the financial statement, it becomes very important as a part of deciding substantive procedures we look into for internal controls. So the auditor will look into the internal controls, and if he believes the internal controls are good, he will perform the test of controls. And if the test of controls tells the control risk is low, then in that case, the substantive production procedures also will come down. So basically, the overall auditor's efforts also will come down. However, if the controls, when you check, you understand controls are bad, more of substantive procedures, more of sample size will be of yours. Basically, more checking you will do. And in that case, obviously, you'll be checking more of transaction. So how much substantive procedures to be performed? For that, you'll be taking the help of the internal controls. And also to identify the risk of material misstatement, it is very important for you to understand the controls. Okay, so as a part of audit, very importantly, test of controls and test of details both will become very important. Okay, now. In respect of the payroll system of Bronze Industries Limited, identify and explain 5 internal control deficiency, recommend controls, and describe test of control. Now, very easily we have understood. Okay, we picked up very easily. So just have a quick recap again. We'll look at the question, where is the control failure? First, we picked up here. First of all, there has not been a supervisory here, right? So first of all, there are some payments made in cash. Okay. And this would be deficiency because the person who's disbursing the cash is not looking at the IDs and all that. Then there is no supervising done for the clock cards, enter and exit. Swiping when it is done, no supervisor is there. Then in dining area, when they enter, clocking out is not there. That means you don't know how much time they're spending on the break period there. Then calculations, the payroll supervisor is looking, okay, that's fine, that's good one. Then temporary staff has been appointed by the factory people, so that is not correct one. Directors or the human resource department has to do that. Overtime has been calculated by the production supervisor, wrong. Directors have to do it. Then clerk's input has not been supervised by anybody else. And bonus is given by production supervisor, that is wrong. Again, directors have to decide it. Then one person is having the control over the entire bank transfer. He's only checking it. He's only amending data and everything. So that's lack of segregation of duty. And also you can see that when you're distributing the cash, obviously I already picked up this deficiency. No ID proofs are checked by the department head. Okay. So all these are the deficiencies which you can really pick up very easily. Okay. So you can tell that who has to do it. That's also I've told you. There has to be a cross check. There has to be a review conducted. Production supervisor should not be doing it. Production department head should be doing it. Director should be doing it. Directors have to take control of the bonuses. Okay, there has to be a review on the clock records, all of that. Okay, then analytical procedures. Analytical procedures, once the question comes, you have to only think about comparison, gross profit ratio, net profit ratio. Then you do comparison between 2 periods or anticipatory results. Or you do some kind of calculation like number of employees, average pay. Okay, whenever an analytical question comes, start creating the kind of trend analysis, comparison through 2 data. Okay, what is your, or you can look into the, how many people have left, how many people have joined. You can create a particular analysis and do a comparison by multiplying the data, and obviously you'll be able to get the answer. Okay, so to understand the unusual fluctuations and all, you can perform the analytical procedures. So comparison, ratio analysis, calculation between 2 period, budgeted figures, all that is analytical procedures. Now again, a straightforward question from IAS 520. Okay, they're asking, how do you decide whether analytical procedure is suitable or not? Very simple. First of all, you have to see analytical procedure should be only performed on those items which are predictable over a period of time. So basically P&L account items. So payroll is P&L account only, so predictable over a period of time. Is reliable data available for the purpose of conducting the analytical procedure? Then are the data comparable? If they are comparable, then the auditor should be able to develop his own expectation. Then the expectation from what is available from the client data. Then you have to compare. If there is unusual fluctuation, then you can take the further audit procedures. So this is a question straight coming from ISA 2520. Okay. Then they again further extend the question. The directors of Bronze Industries Company are considering establishing an internal audit department next year, and the finance director has asked what impact, if any, establishing an internal audit department will have on the future external audit performed by the Scarlet. Okay, let them have internal audit department. Obviously, internal controls will be regularly checked. Okay, and obviously that will be more as a part of the management appraisal process. But how it helps the external audits? Obviously, we know we have ISA 610, which talks about auditor can use the work of the internal auditors. So if the auditor will look into the internal auditor's competence, capability, and whether they have that kind of objectivity to perform this function, then in the next year, obviously the efficiency of the audit, the effectiveness of the audit will be much better, because the auditor can decide on using the work of the internal auditor. So definitely it will have a good impact on the external audit also. Okay, for this we will just go through quickly. For having the understanding of B and C question, how it has to be written. Remaining all are straightforward theory questions. Okay. So let's take up the understanding of question B and C. Okay. So answer is page 427. Okay. Just keeping in mind all the things. Okay. Let's do it quickly. Why you have to need the understanding of components? We did that. I told you theory part, just to understand how much substantive procedure you have to apply. Okay. How much reliance you can place on the controls or not. That all will be understood only by understanding the internal controls. Okay. Now, let us take 2-3 deficiencies. Let us see whether we picked up correctly or not. We'll have 2-3 of them. We'll see how should you write about the control deficiency. Okay, about control. So here you have to understand that you have to pick up the proper control deficiency. You have to give control recommendation, and finally you do testing of control. Okay, let's see if we picked up correctly or not. Clock in and out process not supervised. We picked up correctly. So that part was not supervised by anybody. So obviously person can do manipulation here. Employees swipe their cards at the beginning and at the end of the 8-hour shift. This process is not supervised, that is the deficiency. But you simply cannot tell what is deficiency, you should tell what is the consequence. This could result in the number of employees being swiped in the present when they are not. Okay, so anybody could enter, any person can enter with 2 swipe cards and swipe both and enter. Only one person has entered where swiping has happened of 2, because there has not been any kind of, supervising. This will result in substantially increase in the payroll for bronze, because they have to pay more salary. Now, what will be the recommendation? This has to be obviously supervised by responsible official. Okay, one individual clocking the multiple employees. Okay, then. So one person is clocking multiple employees, that supervision has to be done. A supervisor should undertake a random check of the employees by reviewing who has logged in with a swipe card and confirming visually that person is present or not. Correct? So when he's entering, see that he really entered or not. Then how you test the control? You stand there, observe whether this thing has been really practiced. Is there a supervisor actually there? Inquire with the supervisor whether he really has done it or not. Okay, so that is the testing of control that you do. Let's pick up one more. So what is the control deficiency? Employee breaks are not monitored. This also we picked up correctly. So employee break was not monitored. So what is the deficiency here? You do not know how much time will they take. Excessive breaks can be there. This can decrease their productivity and the payroll cost will increase because you're going to pay them based on the number of hours worked. Correct? So here, break time also you have to apply a supervisor. That is the way in which you'll be able to mitigate this. So auditors should review whether break times have been really, properly actually been supervised, and there should be a formal communication to the staff. Observe the dining area during the break time to ensure the supervisor is really present or not. So you should also check whether really things are happening the way they are communicating to us. If you take one more, it is the same understanding. Temporary staff appointed by the factory supervisor. No, it should be appointed by whom? The human resource people only. Otherwise, there could be manipulation here. Overtime authorization after payment is made. I told you payment you make weekly, but you're reviewing after a quarter. Absolutely wrong. So review also should happen on a regular basis. So basically, all the control deficiencies are quite acceptable. What we have picked up. Okay, substantive. I told you analytical procedures. Always remember whenever substantive compare. Okay, compare with the prior period, percentage. Okay, you do some kind of calculation to check with the actual and all. Then you compare gross pay with the comparison will done with the prior years to assess reasonableness. So wherever the analytical procedure comes, you have to do only these kind of procedures, comparisons and all of that. Suitability, I told you, which are predictable over a period of time. P&L account items, where the data is available. Then you do cross comparison with them and all of that. Okay, then impact on the interim audit and all. Obviously, if you have internal audit department, then as an auditor, you'll be able to rely on the work of them. But obviously, as ISA 610 tells, that you have to look into their competence, capability, everything, and based on that, you're going to decide about whether to use or not. Okay, so these are the kind of questions that you can expect when it comes to internal control. Okay, so let's quickly take one more so that you'll be in a better position to answer things. So we'll take up one, so completion and review part. One quick glance at your end also would be fine. It's not very complicated. So we'll take procedure. Page 173 question. Okay, let's take this one. Okay, this scenario relates to 5 requirements. So we have to answer 5 questions here. The only intention or the only thing that I'm trying to help you out is that you should be able to understand what kind of questions are there and what should be the right approach that you have for the purpose of giving the answers to it. Okay, my focus is only for you to understand the approach correctly. Obviously, these all you have to have an in detail reading. You have to go through properly. You have to practice your end. My focus is only to help you understand the approach correctly. Okay, the focus is that. Okay, now this scenario relates to 5 requirements. It is 1st July 2015. Pineapple Beach Hotel Company provides hotel accommodation, leisure facilities and restaurants. Its year end was 30th April 2015. You are the audit senior of Berry and Company and currently preparing the audit program for the year ending of the audit of Pineapple Beach Hotel Company. You are reviewing the notes of the last week's minutes between the audit manager and the finance director, where 2 material issues have been discussed. So what did they have a discussion about? Okay, first is regarding depreciation. Pineapple Beach Hotel incurred significant capital expenditure during the year on updating the leisure facilities for the hotel. The finance director has proposed that the new leisure equipment should be depreciated over 10 years using straight line method. Okay, so you have to ensure first of all whether capitalization has been done correctly or not, and also your plan should include what, whether the leisure equipments which have been capitalized, what should be the actual way in which depreciation has to be done. Okay, so whether is there any intention for them to buy some new in the coming 5-6 years? That means the life is only 5-6 years. So this will be understanding through some kind of projection reports and all which will be available. Otherwise, 10 years could be considered reasonable. Then something happened regarding food poisoning. Okay, let's see. Obviously, food poisoning means a legal case will be there. Pineapple Beach Hotel Company's directors received correspondence in March from a group of customers who attended a wedding at the hotel. They have alleged that they suffered a severe food poisoning from the food eaten at the hotel and are claiming substantial damages. The company's lawyer have received the claim and believe that the lawsuit against the company is unlikely to be successful. Okay, so he's not giving a probability of the same. All right, what is the requirement of the question? The question is quite simple. What is the question requirement? List and explain the 4 items that should be included in every working paper prepared by the audit team. This has nothing to do with the question or the scenario. On every working paper, what are the normal items that any person of the audit team will write? Suppose if the audit team has 5 people are going to prepare working papers. So what is the common element that is going to be on every working paper? This is a logical answer. You will have the name of the client. You will have the date of the audit procedure which you are performing. Then you will have the procedure that you have performed. Then you'll be having then your name. Okay. Then what is the conclusion? What information you obtained? Do you require further information? Who reviewed your work? Time of review. Okay, signature of the reviewer, your signature for having authenticated that you have done it. Okay, so these all are the common things on every working paper you'll find. So this was a very generalized question. What 4 items will appear on every working paper? Name of the client, date of the audit, okay, the beginning of the audit period, the year ending for which the audit is performed. Okay, then date of review, what is the content of the working paper, what procedure you performed, what was your understanding from the procedure you performed, what conclusion you drew. If you require any further information, it is what, okay, who reviewed your work, when was it reviewed, the name of the reviewer, your name, all of these things will be included in the working paper. So that's a generalized question. Describe analytical procedure the auditor should perform to confirm revenue. Again, revenue, what you will do? Revenue means profits, right? That is incomes. So you can have a trend analysis done. You can compare current year figures with the previous years. Then you can also compare current year with the budgets. You can have a gross profit ratio calculated to check the reasonableness with the industry standards. Okay, then you can perform any other ratio analysis. Okay, you can check the reasonableness check with the sales expense and all that, sales income and all that. So basically comparison data is what you're going to check as a part of analytical procedures. Very easy way to answer analytical. Okay, then you can do some kind of cross calculations. You can do some multiplications. Okay, so much units sold, average sales price, multiply and check whether it is reasonably matching or not. So all of that will be an analytical procedure. Describe substantive procedure the auditor should perform to obtain sufficient appropriate evidence in relation to the depreciation. Okay, in depreciation, understand first of all, depreciation is based on the cost. So first you get the breakup of the cost, see that proper capitalization, something which has to go to revenue is gone to revenue, whether you have properly categorize the classification of cost, whether it has to be capitalized as what to the cost of the asset. Then look into if there is any kind of future projections available where they're telling you're going to replace the asset with a new asset in the 5 years. That means the useful life is considered to be 5 years. So your depreciation should be written up only for the period of 5 years. And here they're telling 10 years should be the useful life. So you see whether 10 years could be appropriate by checking do they have any replacement plans or not. If they don't have any kind of replacement plan, 10 years could be reasonable. Have a discussion with the management, communicate with them, question them, what is their basis for deciding 10 years period? What is the method of the depreciation? Why is that method of depreciation suited, picked up by them? So basically, these are all the ways through which you'll perform the substantive procedures to obtain the evidences. Also, it is depreciation. So go in for calculation also. So re-perform the calculation, recalculate the amount, the percentage applied, and see whether amount of depreciation has been calculated correctly or not. So that is the kind of substantive procedure that you will be adopting. Excluding written representation, describe substantive procedure the auditor should perform to obtain sufficient appropriate evidences relating to food poisoning claim. So food poisoning claim, except for written representation, what you can check for, you can have a external confirmation from your legal counsel, have a communication with the legal counsel and understand regarding what could be the probability of losing or what is the current situation, what is the claim that it could be raised on the company if lawsuit is actually lost by them. Then look into the board's meeting to understand what is the discussion by the board of directors with respect to this particular matter. Is there any payment done for the settlement of this claim? This you can understand by the bank statements. Okay, then you look into the criteria of IAS 38 where you'll understand whether provision has to be created, whether it has to be shown as the contingent liability. If they're meeting the criteria correctly, see if the accounting treatment has been done correctly or not. obtain sufficient appropriate audit evidences whether accounting treatment has been given properly. You check whether disclosure requirements have been done correctly. See whether really provision has to be created, that provision has been created. If it has to be shown as a liability, see if it is shown as a liability. Get the breakup of all the items properly. Okay. Also, when you talk about depreciation here, see that a breakup has been available properly with respect to all the items also, like you have room accommodations, ledger, and all of that. Okay, so now depreciation basically for revenue. So revenue, when you do analytical procedure, you can also do further analytical procedure like breaking up into different facilities, and you can perform like for room sale, you perform a separate ratio analysis. For leisure facilities, you perform separate. For extra facilities provided, you perform a separate trend analysis. Check for reasonableness. Also for analytical procedures, here you can go and pick up for seasonal sales, off-season sales, whether they're reasonably matching or not. Okay, so a lot of things. Also, you can see because of this food poisoning, rumor which has been spread, is it affected your sales or not? So you have to do a lot of investigation to understand whether things have been correctly recorded or not. See, when you look into for one question, automatically you get a hint of other also, so you have to go on writing it. Okay, then they've extended the question further. The date is now 1st September 2015 and the audit is nearly complete. Suggested wordings for the written representation letter has been given to the director of Pineapple Beach Company, including the point confirming the directors believe the food poisoning claim is appropriately accounted for and disclosed in the financial statement, and all the information in the respective claim has been properly provided to the auditor. The directors have stated that they will not sign the written representation this year on the grounds that they believe the additional evidence that is provided is not required by the auditor. Written representation not provided by the management. Not provided. If written representation is not provided, that means we do not have sufficient appropriate audit evidences to support our conclusion. Basically, this will also create a doubt for us in our mind regarding the integrity of the management. If one written representation is not provided, you'll have a doubt on all the other written representation also which have been given by the management. So once you have a doubt regarding the integrity of the management, every information provided by the management, everywhere you'll start having a doubt. So basically, you'll be in a situation where you say you do not have sufficient appropriate audit evidences, because of which the possible effect could be material plus pervasive. So here in this case, the impact on the audit report will be that you will give a disclaimer of opinion. And how will you modify the audit report? In the audit report, first of all, the opinion paragraph, the heading will change as disclaimer of opinion. The writing will change as per you'll not write we have audited, but you'll write we have been engaged to do the audit. So the language will change. In the basis for opinion, you will not give the reason. Rather, in auditor's responsibility, you'll talk about the responsibility of the auditor. You will never include a key audit matter paragraph when the disclaimer opinion has been given. So there are going to be n number of things that are going to be changed in the auditor's report, and the reporting will happen as per ISA 705. So this is the way in which you are going to give the impact on the auditor's report, because this is basically not having sufficient appropriate audit evidences with respect to the situation that you have encountered. Is the point very clear? All right. So that is the way you give the answer for this particular question. Okay, now let's take just one more which I've selected. So though I'll not be able to quickly go through the answer, but yes, I will at least give you an understanding of the kind of question that we can expect from that particular topic. Okay, that was regarding completion and review. Okay, so here they're telling you there are two things which have been identified. Okay, two situations have been given. Just for a quick glance, one situation is where they have lost the backup. They have lost the backup for the sales ledger, and sales obviously is a very material item. If you don't have a backup for this, that means you are not able to account for one of the material item of the financial statement. Sales means receivables, also information you don't have. So basically, this is a very bad situation where auditor does not have sufficient appropriate audit evidences. And it is material and it is also pervasive. Then here they're talking about next thing where I'll just read it quickly for you. Kushia company has experienced difficult trading condition, as a result of it lost significant market share. So here they're talking about going concern. Okay, when you lose a market share, indicator of going concern assumption failing. Management are confident that further funding can be obtained, so they have prepared financial statement using going concern basis, and no additional disclosure has been given by the management. Audit senior is seriously skeptical about this. Even if the going concern assumption could be you have funding ideas and all that, even the disclosure you have to give in the notes to account about the material uncertainty. If you prepare as per going concern and you don't give a required disclosure, then you're going to end up giving a adverse opinion, undoubtedly. The prior period financial statement showed a profit of $1.2 million. However, current year profit, there is a loss of $4.4 million, and therefore net cash outflow for the next 12 months is $3.2 million. So there's an outflow, not inflow. Okay. For each issue, describe What is the issue? Issue here is a losing of the data and other is going concern. Both are going to be material items. Okay. Discuss whether written representation is appropriate. Only on written representation you cannot rely. These are material items. Apart from written representation, you also have to perform other audit procedures. Only written representations will not be sufficient appropriate evidences. Recommend the procedure the audit team should undertake to complete the thing. Obviously, you have to look into for alternative procedures, inquire with the management, try to get up some kind of information through the bank statements and all, get some kind of external confirmation from your from the debtors and all to understand about the kind of sales. Okay, and even then, if you believe it's a material item and you're not able to perform alternative procedure, then in that case, you will not be able to obtain sufficient appropriate evidences to draw the conclusion because sales is material. However, in case of going concern, also you have to ensure that the management is actually giving a proper disclosure. Otherwise, that is going to impact the financial statement where you're going to give adverse opinion. So, impact on the auditor's report if the matter remains unresolved. That means if written representation not provided or you don't have enough evidences, you will be able to only go in for disclaimer of opinion in the first situation, and second situation we are saying about going concern, whether it is not properly disclosed, you'll give adverse opinion. Okay, so this was a very simple question. If you have an understanding of properly regarding 700 series, you'll be able to handle this very easily. Okay, so the basic understanding, or basically the only requirement that I had with respect to this particular session which I wanted to conduct is that because I've given you an exposure of the descriptive type of questions as we took up the respective topics, I really wanted you to have an insight of how the questions will look in the examination from the descriptive part. As I told you in the beginning of the session, descriptive is a real challenge. So my efforts were only for you to understand the approach. Obviously, I've not read line by line or I've not done each and every reading of every concept there. Reason being, I just wanted to give you an understanding, the kind of examination question, the approach, the language, all of this you should be able to understand properly. Okay. Understand, you can see the level of way the descriptive ones are written. So time management plays a very important role when it comes to descriptive part. So you have to be very perfect in managing your time. This will not happen overnight. So because of which extreme level of practice or extraordinary level of practice will be required. I would rather recommend you to go to the portal where questions are available on the computer based format only. See that you actually practice typing. Writing in the books and all will not be helpful to you. You actually practice typing. This will help you understand whether you are comfortable enough to navigate from between the two screens. You'll be able to use the applications properly. Whether you know how to use the spreadsheets, you'll be able to understand whether formulas which are already inbuilt, you'll be able to use them appropriately or not. Word format, with what kind of formatting is available, what all inputs you can take it from the format already available, how table formatting and everything can be done by you. That all in the day of examination directly in the exam hall, you can't expect that you'll get an exposure to there and you'll be able to handle it easily. However good you are in computers, I would still say that this practice is a must for you to enter the examination hall. Without the practice, if you go, it's like you studied the subject, you know the content, but in the main game, you will not be able to give your best. So though you know the content, though you know the syllabus, if you don't practice this in actual, then the efforts will be no good. Okay. So please go to the respective portals. Okay. The portal which is available for your practice questions. Go there, actually type the questions, write the question in the computer based format. That will be the perfect coverage or the perfect practice for the examination point of view. With this, I am completing the entire revision sessions for you. With my lectures, I can guarantee you that you will be able to actually revise quickly all the concepts in a nutshell. Also, you'll be able to pick up upon every aspects which, at least a revision will help you remember those concepts where you know that if particular concept when I was speaking, you are not able to recollect, you will know which area you have to focus more upon. More importantly, I've given the approach for the examination. So you will now understand that if this particular area you have not focused upon, or if this particular practice you have not done, it is still the time that you can do it. Okay. This subject, because it's a hype and because many people students say audit very difficult, audit will not be able to crack in one go. Audit is something most difficult in the applied skill level. Trust me, it is not the subject difficult. It is the approach that has to be modified or managed appropriately. Wishing you all the very best. See that you really have a correct approach towards the examination. Believe in a professional examination to have 100% coverage in your preparation, and only then you will be rightly prepared for the examination. Do not do any kind of selective preparation. Do not have any kind of optional preparation because 18 different questions, 18 different areas will be covered. So obviously the entire syllabus will get covered somewhere or the other in every single question. So your preparation has to be 100%. And because you are in the professional area, trust me, option basis or optional preparation will never be recommended. All right. I believe this will serve as a a very good source for you to revise the subject properly. And also it has helped you in understanding the right way to answer your examination questions and an approach of how you require to prepare for the same. Do well in your examinations. All the very best. Thank you.